Alphabet's recent $32 billion acquisition of cybersecurity firm Wiz, setting records, and it could signal a turning point for slow M&A markets. Kate Rooney has more in today's Tech Check segment. Morning, Kate.
Hey, Sarah, that's what we're hearing. So Google's deal for Wiz, that is certainly the outlier. At that price, it does mark a record for venture-backed startup sales, but smaller deal-making activity is also steadily picking up in Silicon Valley. So far this year, there have been 11 acquisitions worth more than $1 billion. That's according to CB Insights. That's a total of $54.5 billion. If you compare that to what we saw this time a year ago, the first few months of 2024 saw only 2 deals of that size at a total of $3.2 billion. Poppy is one of the recent deals. The venture-backed soda startup is being bought by Pepsi for about $2 billion. SoftBank, meanwhile, buying Ampere Computing for $6.5 billion. And then there has been another AI deal spree. CoreWeave, company set to go public, is buying Weights and Biases for about $2 billion, $1.7 billion. And then ServiceNow scooping up MoveWorks for $2.9 billion, roughly. There are still about 1,000 other startups above that $1 billion mark. Venture investors I'm talking to out here on the West Coast do expect this recent deal spree to continue. I've talked to a couple folks this morning who say they were busy signing term sheets over the weekend, and that prolonged deal drought that I mentioned is one dynamics folks are pointing to here. So potential buyers have a lot more cash to deploy since they hadn't been doing deals for quite a while, and then a lot of these offers I'm hearing from are coming for some of the bigger strategic buyers. The deals do take months to negotiate, so a lot of these started when the new administration took over, and then the departure of Lina Khan has been at the FTC, which you mentioned, has been another major factor, at least psychologically, for some of the mega deals to get done. And while growth equity is picking up, guys, it's not spilling into public markets yet or directly translating to any sort of flood of IPOs. Deal activity in the public markets in terms of IPOs well below records you can see from a few years ago, although there are some out there. I mentioned CoreWeave, some in the works. I have been talking to late-stage venture-backed companies as well who point to the market volatility right now. One investor calling it murky waters for anything but mature late-stage companies. There is still a lot of fear about going public. Startups are not in a rush from what I'm hearing, and a lot are looking to sort of the private markets in private deals as a little bit of a safer route at this point. There is also a lot of access right now through secondary markets, so employees being able to sell their shares in these tender offers. We're seeing more of that as one dynamic, taking some of the pressure off of the startup CEOs out here. As long as their investors and employees can cash out, they're often willing to wait. They're not in a rush to IPO.